Today's lesson is going to dive deep into the framework that has allowed me to trade options profitably in all market conditions. By the end of this video, you'll understand what the All Market Profits framework is and why it's designed to outperform the S&P 500 with less risk and lower drawdowns. So if you're ready to learn how to optimize for consistent risk-adjusted returns, grab your notepad and let's dive right in. What is the All Market Profits framework? Well, at its core, the AMP framework is a blueprint for building an options trading system that safely outperforms the S&P 500, protects capital, and makes money in any market environment, whether it's going up, down, or sideways. And the key idea behind the AMP is that the secret to long-term outperformance lies in two things: harnessing an extractable edge and minimizing drawdowns. It's not just about making money, but it's about protecting it in volatile markets. So how do I do that? It comes down to design. A hyper-efficient, proactively hedged, non-directional option structure with a low-maintenance mechanical trading plan. So let's break down the framework into 5 pillars. Number 1, properly sized positions. Number 2, proactively hedged. Number 3, a multi-legged premium selling structure. Number 4, mechanical objective rule set. And number 5, a non-directional trading system. Now, each of these pillars is essential for constructing a system that can weather all market environments without needing to predict future price movements. Think of it as building a fortress for your investments. Now, you might wonder, why does this system work? There are a few key premises that make the AMP stand out. We can't predict future price movements, but we do know that volatility tends to revert to the mean. Selling options provides a statistical proven edge. That edge, however, is incomplete because the risks posed by direction and volatility. To control these risks, we rely on higher order Greeks, which help manage our exposure in various market conditions. Now, these principles form the foundation of a strategy that truly doesn't depend on guessing which way the market will go next. So what kind of results have I gotten from a strategy like this? Let's talk track record. One of my flagship AMP strategies has been rigorously back-tested and forward-tested, and the results? Since 2015, this strategy has generated an impressive compounded annual growth rate of 20.99%. That's almost double the return of the S&P 500. So what's even more impressive is that this strategy has done all this with just 1/3 to 1/2 the risk, meaning smaller drawdowns and faster recoveries. In fact, the largest drawdown this strategy experienced was just 10.13%, and it took only 14 days to recover. Now let's discuss what really sets the All Market Profit strategies apart: their ability to consistently outperform across various market environments. As an option seller, you face 4 key market types: the sideways market, the grind down market, the rising bull, and the crash market. Here's a quick breakdown of how an AMP style system performs in each of these environments. A sideways market occurs when prices fluctuate within a narrow range without a clear trend. An example of this is the first half of 2015, when the market stayed within a 4% range. And during this period, while the S&P 500 barely moved, the AMP strategy gained over 10%. This is because the AMP thrives in sideways markets due to its non-directional setup and positive theta exposure. A grind down market is a sustained period of gradual decline, typically around 10% or more, and an example is the 2022 market. From January 2022 to October 2022, the market fell minus 25.43%, but the AMP strategy gained 18.69%. In these markets, the AMP shines by leveraging a Greek called charm to navigate the declines and turn losses into gains. A rising bull market is when the market continually rises, like from March 24, 2020 to January 3rd, 2022. The market, the S&P, rose by 114.38%, while the AMP rose by 72.93%. Theta exposure allows it to benefit from time decay while still maintaining a non-directional approach. A crash market is defined by a sudden, significant drop, like the COVID crash of 2020, where the market dropped over 34%. Now, during this extreme event, AMP experienced an only minus 2.27% drawdown. Compared to the S&P's huge losses, and this resilience is due to the system's proactive hedge and long volatility exposure, making AMP not just defensive, but potentially profitable during these severe declines. One of the most critical elements of long-term success is minimizing drawdowns. Because let's face it, no one wants to lose 50% of their portfolio and then they need 100% return just to break even. With the AMP, drawdown mitigation is baked into the system. Since 2015, while the S&P 500 experienced 3 years of negative returns, my AMP strategy has had 0 losing years. The drawdowns have been shallow and the recovery times have been fast. This is the kind of performance you can expect when you focus on managing risk-adjusted returns instead of chasing unrealistic gains. Also, at any point, if you're interested in more personalized guidance, know that I'm here to help. I offer pre-built solutions and customized training to help you along your trading journey. If you're a hedge fund manager or experienced options trader interested in learning more about how I can help you reach your trading goals, feel free to explore the strategies I use and how they can benefit your approach. For more information, check the link in the description.